Hey everyone, welcome back to the channel. Today we're breaking down binary options, what they really are, how they work, and the honest pros and cons nobody sugarcoats. If you've seen those flashy ads promising easy money in minutes, this video is for you. We'll cover the core definition, the exact trading process, the math behind payouts, the real advantages and risks, and the critical regulation and fraud issues. By the end, you'll know exactly whether binary options belong in your trading toolkit, or if you should stay far away. Stick around, hit like if this helps, and let's get into it. Core definition. Binary options are financial derivatives built on a simple yes or no question. You're not buying stocks or currencies, you're making a prediction about whether an asset's price will be above or below a specific level, called the strike price, at a set expiration time. If your prediction is correct at expiry, you receive a fixed payout. If it's wrong, you lose your entire stake. That's the binary part, only two possible outcomes, full win or total loss. Unlike traditional options where value can fluctuate and you might exit early with a partial profit or loss, most binary options settle only at expiration. There's no ownership of the underlying asset, no dividends, and no middle ground. The contract is purely speculative. For example, you might bet that gold will be above $2,400 at 3 p.m. today. If it is, you get the payout. If not, your money is gone. This all-or-nothing structure makes binary options extremely straightforward, but also extremely unforgiving. Understanding this core mechanic is the foundation of everything else we're about to cover. How trading works in practice. Trading a binary option involves four main components. First, choose the underlying asset, currency pairs like euro to US dollar, stocks, commodities such as gold or oil, indices, or even cryptocurrencies. Second, pick the direction, a call or high if you believe the price will finish above the strike, or a put or low if you think it will finish below. Third, select the expiration time, which can range from 60 seconds to several hours or even a full day. Fourth, decide how much to invest. This amount is your maximum risk. Once you place the trade, the contract runs until expiry. On regulated exchanges you can sometimes close early, but on many retail platforms the position is locked until settlement. At expiration the outcome is automatic. If the condition is met you receive the fixed payout, otherwise the stake is lost. The process is deliberately simple, no complex order types, no margin calls, and no need to manage stop losses the way you would with regular trading. That simplicity is part of the appeal, but it also removes many of the risk management tools experienced traders rely on. Payout structure, break-even math, and house edge. Binary options advertise fixed payouts, usually between 70% and 90% of your stake. Let's say you invest $100 on an 80% payout trade. If you win, you receive your $100 back plus $80 profit, totaling $180. If you lose, you get nothing. Here's the critical math most people miss. At an 80% payout you need to win more than 55.6% of your trades just to break even. At 70% the required win rate jumps to nearly 59%. That built-in house edge means the broker or exchange has a statistical advantage over the long run. Even skilled traders struggle to maintain the necessary accuracy, especially on short timeframes where price movement is largely noise. The asymmetry, full loss versus partial gain, is why industry data consistently shows the majority of retail accounts lose money over time. Understanding this math is essential before risking a single dollar. Advantages and disadvantages, risks versus rewards. On the positive side, binary options offer defined risk. You know exactly how much you can lose before you enter the trade, your stake and nothing more. Payouts are known in advance, the learning curve is shallow, and you can trade multiple markets from one platform with very short time frames. For someone who wants quick, clear outcomes without complex analysis, that simplicity is attractive. The disadvantages, however, are significant. Gains are capped while losses are total. The short expiration amplify the gambling-like nature of the product. There's little room for skill-based edge compared to traditional trading, and emotional decisions become easier when trades resolve in minutes. Most importantly, the unfavorable risk-reward ratio works against the trader over a series of trades. What looks like a high win rate opportunity on paper often turns into consistent losses in practice. Binary options reward correct short-term direction but punish even small miscalculations severely. Regulation, legality, and fraud risks. Regulation is one of the most important topics surrounding binary options. In the European Union, the UK, and Australia, retail binary options have been banned or heavily restricted because of high loss rates and consumer harm. In the United States, trading is only legal through CFTC-regulated exchanges such as Nadex. Most online platforms advertising binary options to retail traders operate offshore, outside strong regulatory oversight. Unregulated brokers have a long history of problems, refusal to process withdrawals, manipulated pricing, and outright scams. Regulators regularly issue warnings about fraudulent sites that look professional but disappear with client funds. Even on legitimate platforms, the product remains high risk. Before considering any trade, verify the broker's license, understand your local laws, and treat any promise of guaranteed profits as a red flag. The combination of complex global rules and aggressive marketing makes due diligence non-negotiable. That's the full picture on binary options: how they work, the real math, the pros and cons, and the regulatory reality. They're simple on the surface but carry serious risks and a built-in disadvantage for most retail traders. Always do your own research, never risk money you can't afford to lose, and stick to properly regulated platforms if you decide to explore them. If this video helped clarify things, drop a like, subscribe for more no-nonsense trading explanations, and let me know in the comments what topic you want next. Trade smart, stay safe, and I'll see you in the next one.